Hey guys, in today's video, let's see how the stock market performs on trading days for the last 26 years. This will cover the dot-com bubble, the GFC and COVID, so it would be a decent sample size. Let's start by installing the necessary packages, if you haven't done so. Then import the necessary libraries. Yahoo Finance, Pandas, Matplotlib, NumPy and Datetime. Then we're going to set some display options for readability. We'll set the max columns to none and the display width to 1000. Okay, with that done, we can go ahead and download our data from Yahoo Finance. We'll use the Finance library. Set the end date to now and the start date to the end date minus 365 multiplied by the number of years. In this case, 26 to get the dot-com bubble in our sample size. Now let's do some initial data exploration, starting with the first 5 rows of data. Okay, we have data starting from 1999. Next, let's print some summary statistics about the dataset. We have 6,535 days worth of data, and in that period the S&P has gone from the 600s to the 6,000s. Now let's analyze how many down days and up days we have by creating a new column called day_type. An up day would be when the close is greater than the open price. A down day would be when the close is lower than the open. And a flat day would be when the close equals to the open. Now let's count the number of up days and down days. We can just do a value count of the day_type column. Printing out the count. So in 26 years, we've had 3,485 up days and 3,047 down days, with only 3 flat days. In general, the market has an upwards bias. Now let's convert these numbers into percentages. It works out to around 53% for up days and 47% for down days. Now let's categorize the magnitude of the changes by using a function that uses an if-else statement and returns the magnitude in percentages. We'll have a couple of tranches between 0 to 1%, 1 to 2%, 2 to 3%, and more than 3%. Let's start with percentage change more than 3% and work our way down from there. Let's create a daily percentage change column and then categorize the change using the function that we created. With that done, we can count the days by change of magnitude. We can do this by doing a value count of the change_category column. Analyzing the results, we see that most of the time, the market is down or up within a 0 to 1% range from the open price. The number of times it closed between 1 to 2% is even at 595. And then it is a pretty sharp drop for 2 to 3%, and more than 3% changes are so infrequent, only about 150 times over 26 years. Now let's create a prettier summary table and put some percentages to those numbers. Okay, we have our summary table of the up and down movements in the market. Looks like I need to correct the categorize_change function from earlier. Okay, this looks correct. Now we see that 75% of the time, markets will close between 0 to 1% from the opening price. Around 18% of the time, you will see a movement that ends up closing between 1 to 2% from the opening price. Movements between 2 to 3% happen only about 4% of the time, and only 2% of trading days have seen prices close more than 3% from the opening price. This basic statistical information could be helpful if you're trading zero-day options. In another video, let's look at some correlations with other assets and how the S&P performs. Take care, and I will see you in the next video.